Right now, today, there is money sitting in federal and state programs with your name basically on it, approved, funded, just waiting for someone to ask for it. And the only reason it hasn't reached you yet is that claiming it is entirely on you. Let me be clear about what this is before you decide it's not for you. This isn't charity. It isn't a handout. It's 15 real government-run programs, benefits you likely already qualify for under the rules as they stand in 2026. Money that's already budgeted and goes unclaimed every year for one reason. Nobody hands you a list of it. So I built one, all 15, one at a time, in plain language. What each program actually is, what it's worth in 2026 dollars, and the exact words to use when you pick up the phone. Stick around to the end, because one of these, I'll tell you which, when we get there, is worth more than everything else on this list combined, and it's the one almost nobody thinks to ask about. Grab a pen. By the time we're done, 2 or 3 of these will apply to you or someone you love, and there's a good chance you'd never have found out otherwise. I'm Grace. I'm not selling anything here, and it makes no difference to me whether you claim one of these or none of them. I just spent the time digging through agency after agency so you don't have to. Here's the pattern worth noticing before we start. Every system in this country is excellent at finding you when you owe money. Nobody's ever missed a tax payment because the IRS forgot to send the bill. But almost none of these 15 programs work that way in reverse. Nobody calls to say, you qualify, here's your check. You have to know the program's name and ask for it directly. That's the entire trick. And that's what today fixes. Stay with me whether you're 62 or 92. Some of these open up before you turn 65, and others you can still be claiming well into your 90s. Number 1, Supplemental Security Income, or SSI. This runs separately from a regular Social Security check. If your monthly income is low enough, SSI can add up to $994 a month for a single person in 2026 and up to $1,491 for a couple, none of it taxed. What keeps this money unclaimed is a guess people make in their own head. They look at their situation, assume it's not bad enough, and never bother filing. There's no penalty for applying and getting turned down. There's a real cost to never asking. Apply online at ssa.gov or call 1-800-772-1213 and say, I'd like to apply for supplemental security income and find out if I qualify. Number 2, Social Security spousal and survivor benefits. If your spouse passed away, you may be owed a survivor benefit on their record starting as early as age 60. If you were married 10 years or more and are now divorced, you can often claim on your ex-spouse's record. It costs them nothing, and they're never even notified. And if your own benefit is smaller than half of your spouse's, you may be owed a top-up right now. Social Security won't always volunteer this. Call 1-800-772-1213 and ask, I want to know if I'm entitled to a spousal or survivor benefit and whether it's larger than what I'm currently receiving. Number 3, SNAP food assistance for households 60 and older. Once everyone in the household hits 60, the rules shift. The gross income test disappears, and you can deduct unreimbursed medical costs above $35 a month before your income is even counted. That can be worth a couple $100s a month in groceries. Apply through your state's SNAP office or call the USDA National Hunger Hotline at 1-866-348-6479. They'll connect you to the office nearest you and walk you through it. Number 4, your state's own senior supplement, officially called the State Supplementary Payment, or SSP. Most states run one on top of federal SSI. In some states, it's added automatically to your SSI deposit, so you never even notice two separate payments. In others, you have to apply for it separately through your state's social services office. Search your state's name plus state supplementary payment and see what you've been walking past. Number 5, the extra standard deduction for being 65 or older, plus the newer senior bonus deduction. The day you turn 65, the IRS automatically gives you a bigger standard deduction, $2,050 more if you're single, $1,650 more per spouse if you're married. But there's a second, much larger one that took effect for tax years 2025 through 2028, an additional deduction of up to $6,000 per person, or $12,000 for a married couple where both spouses qualify, phasing out once income passes $75,000 single or $150,000 joint. You don't apply separately for either one. You claim it on your return, but a rushed preparer or a rushed software session skips it constantly. Number 6, the credit for the elderly or the disabled, filed on Schedule R. This is a tax credit, not a deduction. It comes straight off what you owe, dollar for dollar. For 2026, income limits run from about $17,500 for a single filer up to $25,000 for a married couple where both qualify, and the credit itself runs from $3,750 up to $7,500 depending on filing status before other income reduces it. It's one of the oldest senior credits on the books and one of the least claimed because it lives on a form most people never open. Ask your tax preparer about Schedule R by name. Number 7, a filing strategy for couples. When you're married and file jointly, everything compounds. Each spouse gets their own age 65 deduction. You can time which spouse claims Social Security first, so the higher earner's record becomes the largest possible survivor benefit later. Couples routinely leave money on the table simply by filing as though they were still two single people. Number 8, this is the one to stay for. Medicare savings programs. If your income is limited, your state will pay your Medicare Part B premium for you. That's $202.90 a month in 2026, over $2,400 a year, taken straight out of most seniors' Social Security checks before they ever see it. There are 3 tiers. The top tier, QMB, covers a single person up to roughly $1,350 a month and a couple up to roughly $1,824. QMB doesn't just refund the premium. It also wipes out your Medicare deductibles and copays, and federally, a provider isn't allowed to bill a QMB enrollee for that cost sharing at all. The next tier, SLMB, covers income up to roughly $1,616 single, $2,184 couple, and pays the Part B premium only. The third, QI, covers up to roughly $1,816 single, $2,455 couple toy, also premium only, but funded first come, first served, so don't sit on it. All 3 share an asset limit around $9,950 single, $14,910 couple, though your home and car don't count toward that, and a handful of states don't check assets at all. Put together, that's over $2,400 a year back in your pocket for as long as you stay enrolled. And at the QMB level, your out-of-pocket costs largely disappear on top of it. Apply through your state Medicaid office or your state health insurance assistance program called SHIP. Say, I'm on Medicare on a fixed income and I want to know which Medicare savings program tier I qualify for. Number 9, the medical expense deduction. if you itemize unreimbursed medical costs above 7.5% of your income, prescriptions, dental, hearing aids, mobility equipment, long-term care insurance premiums, even mileage to appointments, it can come off your taxable income. Keep every receipt in one envelope all year. For a senior with a heavy medical year, this single deduction can outvalue any individual check on this list. Number 10, extra help with Medicare. Part D, if you're already approved for a Medicare Savings Program, Medicaid, or SSI, you're automatically enrolled, no separate application. If not, the 2026 income limit to apply directly is roughly $23,475 a year single, or about $31,725 for a couple, with resource limits around $16,590 single and $33,100 couple. Everyone who qualifies now gets the full subsidy. The old partial tier is gone. Your Part D premium drops to zero. Generic copays cap at $5.10. Brand name copays cap at $12.65. And once your out-of-pocket drug costs hit $2,100 for the year, every covered prescription is free for the rest of that year. Apply through Social Security at ssa.gov or by phone. Number 11, LIHEAP, help with your heating and cooling bill. It's federally funded, about $4.05 billion this fiscal year, run through your state, and it typically pays a one-time benefit somewhere between $200 and $1,000 directly to your utility company. It never counts as income against you anywhere else. Many states also cover summer cooling assistance. If your utility is about to shut off service, crisis cases are often processed within a day or two. Dial 211 or contact your state's Energy Assistance Office and ask about the related Weatherization Assistance Program too, which can fix the underlying problem, a failing furnace, bad insulation, so the bill is smaller every year after, not just subsidized once. Number 12, Senior Property Tax Relief. This varies enormously by state, which is exactly why it goes unclaimed. Most states offer some mix of a homestead exemption that lowers your home's taxable value, an assessment freeze that stops your bill from climbing as you age, a circuit breaker credit that refunds part of your tax once it's too high relative to your income, or a deferral that lets you postpone the tax until the home is sold. Search your state and county name, plus senior property tax exemption. Number 13, Medicaid long-term care, and not the version you're picturing. Most people assume Medicaid is only for those with nothing and never look again. But Medicaid is the largest single payer of nursing home and in-home long-term care in the country. For 2026, the income limit for nursing home Medicaid and home and community-based waivers runs up to roughly $2,982 a month per person in most states. If you're married and only one spouse needs care, spousal impoverishment protection lets the healthy spouse keep a monthly income allowance between roughly $2,643.75 and $4,066.50, plus protected assets between roughly $32,532 and $162,660, so the healthy spouse isn't left with nothing. A semi-private nursing home room now runs close to $9,300 a month. Before you or a family member writes Medicaid off, get the actual numbers checked by someone who knows long-term care rules specifically. It's the difference between paying that $9,300 a month out of pocket and having it covered. Number 14, Lifeline, discounted phone and internet. This FCC program gives eligible households up to $9.25 off their phone, internet, or bundled bill every month, up to $34.25 on tribal lands. You qualify automatically if you're on SNAP, Medicaid, or SSI, or if your household income is at or below 135% of the federal poverty guideline. On top of that, most gas and electric utilities run their own senior or low-income discount rate that they rarely advertise. One phone call asking, "Do you have a senior or low-income discount program?" can shave real money off a bill every month. Number 15, the one that unlocks the other 14, free expert help. You don't have to figure any of this out alone, and you don't have to pay for it. The IRS runs free, volunteer-staffed tax preparation through Tax Counseling for the Elderly and VITA. AARP runs a separate free program called Tax Aid. For Medicare questions, every state has a free SHIP counselor whose entire job is sitting down with you and finding what you qualify for. And your local area agency on aging is one phone call that connects you to nearly everything else on this list. One more move that didn't get its own number but matters for a lot of you. If you're 70 and a half or older and you have an IRA, you can send up to $111,000 in 2026 directly from that account to a charity called a qualified charitable distribution. It counts toward your required withdrawal for the year, and it never shows up as taxable income at all, which can also help keep you out of a higher Medicare premium bracket. Ask whoever manages your IRA about a QCD by name. Here's what that whole list adds up to for two real kinds of situations. Picture a widow living on a modest Social Security check. She applies for a Medicare savings program and qualifies at the SLMB tier. That's $2,434.80 a year back in her check, permanently, sometimes with a retroactive lump sum on top. Because she now qualifies for that program, she's automatically deemed eligible for extra help too. So her Part D premium drops to zero and her copays cap out low, easily several $100s more across the year. Her state's LIHEAP program covers a chunk of her winter heating bill, say $500. And because her income is modest enough, she also qualifies for a partial SSI payment on top of everything else, say $200 a month, $2,400 for the year. Add it up, and you're well past $5,500 in a single year, for a woman who a year earlier would have told you flatly that the government didn't owe her anything. Now picture a married couple, both 68, filing their taxes the way they always have, as two separate returns out of habit. Once they switch to filing jointly and coordinating their claims, each of them picks up their own age 65 deduction, plus a share of the new senior bonus deduction, potentially $12,000 off their combined taxable income if their earnings fall under the phase-out. They check the Schedule R income limits and find they qualify for a credit worth up to $7,500 off what they owe. And because the higher earner delays claiming Social Security while the lower earner claims early, the household locks in a larger survivor benefit for whichever of them lives longer. None of that required a financial advisor. It required going down a list and asking the right office the right question once each. One warning that applies to every program on this entire list, because real money moving always draws the same predator. If someone calls you first, claims to be from Medicare, Social Security, or your state energy office, and says you're already approved and just need to give them your bank account or Social Security number to release it, hang up. Every one of these programs works in reverse. You call them using the number on your card, your statement, or the official website, never a number someone gave you over the phone. If this helped, send it to someone you know who's 65 or older, especially someone who's already decided in their head that programs like this aren't for them. They're the ones most likely to be leaving money behind and least likely to go looking for it themselves. This is general education, not personal legal, tax, or financial advice. Confirm the specific numbers for your state and situation before you rely on them. I'm Grace. None of this money does you any good sitting in a government ledger. Go make the calls.